Money is moving, quietly, strategically, and it all points to one thing: insider activity around Ripple, around Chris Larsen, and around what could be the most critical timing event for XRP yet. The ETF cycle is here, and those who understand timing are positioning early, before the mainstream even realizes what's happening. Whale wallets have started pulsing again, not randomly, but in waves. Hundreds of millions in XRP moving across private channels, off-exchange wallets being reactivated. After months of dormancy, Ripple executives are adjusting liquidity routes, synchronizing flows. While the SEC finalizes ETF procedures that, for the first time, include frameworks XRP could align with, this isn't conspiracy, it's data. On-chain movement doesn't lie, and when you see Ripple insiders repositioning assets at the exact moment ETF paperwork language evolves, you realize there's a coordination occurring, one that suggests internal understanding of what's about to change. 4 months. The narrative has been slow, legal fatigue, sideways charts, uncertainty, but beneath that quiet exterior, the foundation has been shifting. Ripple executives have attended private meetings with regulators, digital asset integration teams at major financial institutions, even internal communications within custodians suggest XRP readiness, and the timing matches perfectly. ETF infrastructure requires liquidity sources, hedging mechanisms, and regulated flows. Ripple provides all three. Chris Larsen's movements aren't about speculation, they're about infrastructure deployment, liquidity placement, asset availability, the type of moves that precede something operational, not narrative. The volume doesn't always spike when insiders move, because they move when markets sleep, when headlines fade, when the noise quiets. That's when positioning happens, and that's exactly what's been happening this quarter. Dormant wallets lighting up, Ripple balances tightening, ETF framework completion nearing. The pattern is too clean to ignore. Every XRP investor knows that Larsen's wallet activity has historically aligned with pivotal developments, whether it was escrow adjustments, institutional testing, or pre-legal settlements, and now it's happening again. Large XRP clusters leaving known Ripple-associated addresses, routed through intermediary custodians, and settling into newly opened institutional-grade storage solutions. That's not retail activity, that's insider recalibration, and the timing couldn't be more aligned. The SEC's ETF overhaul has entered its final stage. Asset classification updates are being standardized, clearing paths for tokens that meet utility and compliance benchmarks. XRP fits the mold perfectly, and Ripple executives know it. You can sense it in the way information trickles out, subtle statements in interviews, cautious optimism in press comments. The language is shifting. The same executives who once avoided speculative discussion are now hinting at utility-driven valuation, a sign they're preparing for a market that values XRP differently, fundamentally, structurally, because when ETF money enters an asset, everything changes, volatility decreases, institutional trust increases, and long-term adoption finally accelerates. The same shift we saw with Bitcoin post-ETF approval, but this time, XRP's framework is arguably more robust, because it's tied to real-world settlements, to bank-grade infrastructure, and insiders see this clearly. Ripple's internal memos, liquidity provider partnerships, cross-border corridor tests, they're all ramping up. It's as if the company knows liquidity needs to be prepared before the ETF door opens, and that's where Chris Larsen's moves become critical, because his wallets serve as the heartbeat of Ripple's macro readiness. Each transaction carries weight, not just in value, but in timing. When those transfers hit, they coincide with legal milestones, partnership disclosures, or major market alignment, and this latest pattern fits that rhythm perfectly. ETF frameworks closing in, regulatory tone softening, Ripple insiders realigning, XRP consolidating. This is what accumulation before ignition looks like, not hype, not rumor, but precise, quiet alignment, the kind that happens when those with access to regulatory clarity act before the public can see it. Larsen's moves are effectively a signal, a whisper through the blockchain that something operational is shifting, and it's not just about XRP's price. It's about Ripple's structural control. As ETFs demand more transparency, Ripple must reassign liquidity sources to comply. That means moving internal XRP, reallocating reserves, adjusting escrow mechanisms, all to fit an ETF-compatible format, and that's exactly what's visible right now. To most people, this looks like coincidence, but insiders understand that ETF readiness isn't just paperwork, it's liquidity staging. Ripple must demonstrate its ability to support institutional-scale redemption, and that requires repositioning hundreds of millions of XRP, the kind of movement only visible if you know where to look, and Larsen knows exactly where to move. He always has. His timing historically aligns with clarity windows. Ripple has never been this synchronized with SEC movements. Both parties seem to be in a procedural phase now, not adversarial, but administrative, a sign that compliance and readiness have converged. The ETF timing, therefore, is no longer speculation, it's preparation. The insiders are already there, Ripple's infrastructure has matured, their liquidity lines are active, custody partners are being announced quietly, and token flows match institutional setup behavior, meaning the shift from retail-driven XRP to institution-driven XRP is already underway. The public won't realize it until it's official, until a filing appears, or a statement confirms it, but by then, the positioning will be complete, insiders already established, Ripple fully integrated, ETF liquidity fully provisioned, and retail traders left wondering how the move happened so fast. It's always this way, insiders move first, retail reacts later, and the blockchain always records both. Right now, it's recording insider action, coordinated, disciplined, timed perfectly with market silence, the calm before ETF confirmation, the alignment before mass inflow. And once the inflow begins, the game changes forever. XRP's volatility compresses, liquidity deepens, and utility-driven demand overtakes speculation. The transformation Ripple envisioned a decade ago finally becomes tangible, and it's all being signaled right now, quietly, through insider movements. So, if you're watching this unfold, understand what's truly happening. XRP's current price action isn't weakness, it's patience. It's a coiled spring of preparation waiting for the ETF trigger. Insiders have already made their move, Ripple's executives are aligning liquidity. And the only question left isn't if it happens, it's when. The deeper you look, the clearer the alignment becomes. This isn't random movement, it's orchestrated, methodical. Ripple's liquidity grid is preparing for something that will redefine the asset's role in institutional finance, and Chris Larsen's actions, as subtle as they appear, tell a story few are decoding in time. On-chain analysis shows precision. Transfers occurring in synchronized intervals, large blocks of XRP moving across multi-signature wallets, through institutional-grade custodians, and into nodes associated with banking corridors Ripple once tested during early ODL phases. This is the type of operational refinement that precedes activation, not speculation, and the ETF environment demands exactly that: structured liquidity, verifiable audit trails, consistent flow channels. Everything Ripple has spent years building now aligns perfectly with what regulators want to see before approving a spot product. This isn't about hype anymore, it's about compliance, execution. Readiness. Chris Larsen's recent reallocation, nearly $500 million in XRP over several tranches, went unnoticed by retail traders too busy reacting to minor price swings. But to those who understand institutional behavior, that movement represented the deployment of liquidity for something bigger, a catalyst event Ripple insiders know is approaching. And when you overlay this with ETF procedural timelines, the correlation becomes impossible to dismiss. The SEC's latest documentation cycle includes language referring to digital asset readiness, stable settlement frameworks, and cross-border audit compatibility, terms that mirror Ripple's ODL system structure almost word for word. It's not just XRP fans making noise, it's the regulators themselves evolving their language, and Ripple's silence speaks volumes. No rebuttals, no defenses, just quiet structural movement, internal reassignments, liquidity alignment, escrow timing shifts, and corporate silence, the behavior of a company preparing for greenlight, not confrontation, and that greenlight may already be decided behind the scenes. Multiple sources have pointed out that ETF readiness programs have been circulating between SEC subcommittees and institutional custody partners. With XRP mentioned in preliminary benchmarking reports, it's all happening under layers of administrative phrasing. The truth is, ETF inclusion isn't simply an approval, it's an absorption into the global liquidity network.